Hi, my name is Gontse Tsatsi, Head of Retail Client Management at Old Mutual Investment Group, and I'm joined by Portfolio Manager Meryl Pick. We're going to be talking about inflation. Meryl, what is inflation and how does it work? I'm also keen to find out from you what the current state of inflation is both locally and globally, and how we've catered for that in the funds that we manage.
In simple terms, inflation refers to the fact that prices of goods and services go up every year. For example, when I was a little girl, my mother would send me to the shop to buy bread and milk with a 5 Rand coin, and I would come back with change. Today, 1 liter of milk costs almost 20 Rand. And that is a reflection of the fact that every single year prices are going up by a few percentage points. What that means as an investor is you need to cater for that and make sure that your investment returns are outperforming inflation, or if you do not, in reality, you are actually getting poorer and your spending power is dropping in real terms. Currently, the world is experiencing one of the highest periods of inflation that we have seen in decades at a global level. South African inflation is somewhat higher than we've had in the recent past, but is in control relative to where we've been. Some of the drivers of this are short-term disruptions due to the COVID pandemic. There's been a lot of supply chain disruptions, and that has caused dislocation in prices. Also, many global economies stimulated and literally gave checks to consumers to tide them over during COVID. But at the same time, these consumers were sitting at home, not able to go to restaurants, not able to go to work. So they spent that money on goods rather than services. But as I mentioned before, supply disruptions were happening at the same time. So short supply of goods, higher demand for those goods sent prices up. But there are some longer term drivers of inflation as well that are coming into play. We're seeing deglobalization, more local production. We're seeing older people, as populations age, not working, but still buying and still consuming goods. So in aggregate, there is more demand for goods and less workforce producing. So incrementally, prices are going up. In South Africa, inflation has been tame compared to the 80s because our Reserve Bank has actually done a very good job of keeping inflation in a band of 3 to 6%. Also, companies have been unable to pass inflation on because at times the South African consumer has been quite under pressure. So in our case, there was no government handing big checks to consumers, so people simply did not have money. So companies simply could not pass prices on. So even though certain things are getting more expensive for companies to produce goods and services, prices have actually remained under control. Now, going forward, we do run the risk that the higher global inflation starts to filter through into our economy, especially if it comes through as a weaker Rand. But at this point, our outlook for South Africa's inflation is around 4.5% over the next 5 years. One of the simplest ways to cater for inflation is to look for real assets in portfolios. So assets of a fixed income nature, like government bonds or money market, give you a lot of security and a lot of stability. But unfortunately, very often interest rates are set below the rate of inflation. So in real terms, you are not getting any richer if you play it very safe and remain invested only in fixed income products. So one has to take a little bit of a risk and invest in a diversified mix of real assets, such as equity, companies that are actually growing, developing new products, and therefore growing their profits ahead of inflation, or real assets such as property. So how we cater for this in our suite of funds is by doing exactly that. We have some assets in equity, in property, as well as giving the balance of the safety that comes with fixed income assets. And this is how we ensure that over the long term, our clients are actually beating inflation and getting richer in real terms.